Hello, my fellow investors, and welcome back to the channel. We've got another packed week of market news to break down, so grab your coffee and let's dive right in. This week saw some absolutely massive shifts, from record-breaking buyouts to major regulatory actions. It's a perfect snapshot of the dynamic and sometimes volatile world of investing. First up, let's talk about the gaming industry, which just witnessed history. Electronic Arts, the titan behind franchises like EAFC, The Sims, and Need for Speed, has agreed to be taken private in the largest leveraged buyout ever recorded. A consortium including Saudi Arabia's Public Investment Fund, or PIF, Silver Lake, and Jared Kushner's Affinity Partners is acquiring EA for a staggering $55 billion. That's a 25% premium over its market value. The deal involves a $36 billion in equity and a hefty $19 billion in debt financing. EA's CEO, Andrew Wilson, is set to remain at the helm and has called the deal a powerful recognition of the company's work. This move is a massive play for Saudi Arabia, significantly expanding its footprint in the global gaming and esports scene. The kingdom already hosts the Esports World Cup, will stage the 2027 Olympic Esports Games, and holds stakes in other gaming giants like Nintendo and Take-Two Interactive. This follows their previous big acquisitions, like Niantic's gaming division, the creators of Pokémon Go, and Scopely, known for Monopoly Go. However, the deal isn't without its critics. Industry experts are raising alarms about that $19 billion debt burden. There's a real concern that a significant chunk of revenue from EA's blockbuster titles will now have to go towards servicing this debt instead of being reinvested. This could potentially stifle innovation, lead to job cuts, and slow down the development of new games. It's a classic wait-and-see situation, but the implications for one of the world's biggest game publishers are huge. We'll be keeping a close eye on how this unfolds for gamers and investors alike. Now let's shift our focus closer to home, to the Singapore market, where the co-living sector is hitting a major milestone. Kaliwu, the co-living business unit of LHN Group, has officially lodged a preliminary prospectus for an IPO on the Singapore Exchange mainboard. This is a big deal for the burgeoning co-living space in Singapore. For those unfamiliar, Kaliwu operates 25 properties across the island and currently manages nearly 3,000 rooms. But they have some seriously ambitious expansion plans. They're targeting close to 4,000 rooms by the end of the 2025 fiscal year, with a long-term goal of hitting 10,000 rooms by 2030. LHN's executive chairman, Kelvin Lim, stated that this growth will be fueled by a mix of new property developments, master lease agreements, and management contracts. They are clearly positioning Kaliwu to be the undisputed leader in Singapore's co-living market. In a related move, Kaliwu also signed a non-binding term sheet to potentially divest one of its properties, Kaliwu PP, for nearly $44 million. The interesting part is the deal includes a 6-year leaseback arrangement, which means they would sell the property but continue to operate it. This is a smart, asset-light strategy that allows them to unlock capital for further expansion while still growing their operational footprint. It's a fascinating development to watch as urban living trends continue to evolve. From ambitious growth, we turn to a more sobering story involving regulatory challenges. Cord Life Group, a major player in Singapore's cord blood banking sector, is facing serious trouble. The Ministry of Health, or MOH, has issued a notice of intent to suspend its cord blood banking services for up to 1 year, starting from July 2025. This means Cord Life would be prohibited from banking any new cord blood units, although they must continue to maintain all the units they currently have in storage. This action comes after audits revealed significant compliance failures. While Cord Life had made some improvements in areas like temperature monitoring, it reportedly failed to maintain standards in critical areas like governance, incident reporting, and the processing protocols for new cord blood units. The MOH has directed Cord Life to replace its clinical governance officer and review all laboratory records for approximately 160 units collected since the beginning of this year. This isn't the first time CordLife has been in hot water. They faced a previous suspension in December 2023 for temperature control lapses. This new notice represents a serious escalation in regulatory oversight and highlights the critical importance of compliance in the healthcare sector, especially when dealing with something as precious as cord blood. It's a stark reminder of the risks involved when companies fail to meet regulatory standards. Finally, let's talk about a potential blockbuster deal in the property sector. Luxury hotel group Mandarin Oriental is reportedly in advanced negotiations with Chinese tech giant Alibaba. The deal revolves around a prime development in Hong Kong's Causeway Bay, with a potential price tag of HK $7 billion. This potential transaction underscores the contrasting fortunes we're seeing across different sectors. On one hand, you have the aggressive expansion and mega deals in tech and gaming. On the other, you have the property sector navigating a complex market, with major players looking to realign their portfolios. A deal of this magnitude between a prestigious brand like Mandarin Oriental and a tech behemoth like Alibaba could have significant ripple effects, signaling shifts in corporate strategy and asset ownership in one of Asia's most important financial hubs. We're still waiting for confirmation, but this is definitely a space to watch. And that's a wrap for this week's market highlights. From a record-breaking buyout in gaming, to a major IPO filing in Singapore and significant regulatory action in healthcare, it's clear that the investment landscape is as dynamic as ever. Each of these stories offers valuable lessons about growth, risk, and the ever-present hand of regulation. Thank you so much for joining me today. If you found this breakdown helpful, please hit that like button. And don't forget to subscribe and turn on notifications so you never miss an update. What are your thoughts on these major market moves? Let me know in the comments below. Stay smart, stay informed, and I'll see you in the next video.